So, welcome! I just put together my studio and I'm happy to be back because today we are talking about some crazy topics, okay? We will talk about the 10-year yield because I believe this is important to understand what is happening there. There's all about the news. It seems it could be the next October correction, something similar that we saw back in February, okay? Then we will talk about Blue Origin because there's some couple of brand new news, and then we will talk about a little bit inflation, and then Tom Lee, one of my favorite persons on Wall Street. And let me know in the comments, guys, where you are watching from. Obviously, nobody has a crystal ball. Even this crystal ball can't tell me where we're going with some stocks that we are, let's say, very, very proud owners of. But you always try to get the sense where the market is going. And the most important part is to understand why. Okay, and then it is all about. Follow me also on Instagram, guys. Smash the like button and make sure to subscribe if you're new here and don't want to miss this kind of very, 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 very important. Let me just okay. Yeah, so let's dive directly in. So the markets are a little bit, I would say, undecisive. Okay, we have the Treasury yield, right? If there's a recovering economy, and I think you can see here where we are coming from with the health questions about the new variant and so on. You can see here that since then we gained. This is normal, guys, okay? The issue is always, let me also put my picture here so you can see me while I'm showing you this screen here. So you see, guys, I just came back to Dubai and must work a little bit on the presentation here. But here we go. All right. So as you can see, guys, the problem is not that it goes up. It must go up, okay? It must go up because if the economy is recovering, then you will see that the Treasury yield is rising. The question is always how fast. If we have a too fast increase on this yield, this is a little bit scary. And guess what? Guess when this happened the last time? The last time it happened back in February, okay? Back in February until about around March, we had an increase up to 1.73, which scared the market a little bit. And you know what happened there, okay? If we're going into the S&P 500, you can actually see that if we are looking into the 1-year chart, that back in January, we had a small dip. But then, you know, the whole madness on the market, you know, Bitcoin to 60,000, stocks went crazy and so on, all-time highs over all-time highs from Tesla to space. And then, you know, we had this a downturn because of the kind of scared, you know, people were scared, investors were scared, they didn't know what is happening on the market. And I think it could be something similar if this yield is still rising. Okay, so this is something to keep in mind, guys. When you guys invest, keep in mind the yield, just to see if you are, maybe if you're trading in and out, and this is very, very important factor. Now, the second thing that we wanted to talk, obviously, is Blue Origin. And Blue Origin is one of the most successful space companies. For me, there's just three space companies, okay? There's Virgin Galactic, obviously, here, the one and only Spaceship Two. Even though I think this got a little bit rusty here, as you can see. Other than that, you are having SpaceX, obviously, with Elon Musk, who is always happy to dance a little bit. And then, obviously, we have also Blue Origin, the space company of Jeff Bezos, the richest person on Earth, founder of Amazon. And he actually shooted out, or Blue Origin shooted out two brand new news. Okay, the first one is that Jeff Bezos doubles time with Blue Origin to focus more on his space company. What does it mean? CNBC reported here that Jeff Bezos has historically dedicated Wednesday afternoons to either updates. Obviously, I need to show you that. To either updates and discussions at Blue Origin. People familiar with the situation told CNBC. In the past months, Bezos added Tuesday afternoons as well. Those people said effectively doubling the amount of time he spends each week with his space company. He has called Blue Origin in his life most important work, and while demands on the time of one of the world's richest people are high, Bezos now is significantly committing more energy and focus onto his space company. Now, obviously, there's a lot of technologies that you can, manage a company remotely, even, right? But I'm asking myself two questions. First of all, if it's your most important work and you don't want to retire, right, and just don't sit on your yacht and be the richest person on Earth, then why you are just 2 days out of the full 7-day week at this company? Okay, that's number one. And even this is already the increased amount. And second, the most important part for me is why afternoons? I mean, obviously it can have to do with scheduling and stuff. But I can tell you that Amazon founder Jeff Bezos once said in an interview that he wants to spend the most effective time, which is in the mornings, where he, always the most critical decisions for a company like Amazon. Why he don't, invest this mornings with this company? Okay, so I don't know. Yeah, I don't know. Blue Origin somehow got me bad in this couple of weeks, because, it seems like every now and then they are now on the sue things, right? They are suing the companies just because they are better than them. And, then you are thinking, okay, what's going on, right? What's going on with this person? What's going on with the company? There were senior people left the company because Blue Origin founder or Blue Origin was suing Elon Musk and co. So I don't know if this is the right thing to do, specifically with tech-heavy companies where engineers want to, engineer instead of, working towards a court case, right? So anyway, there's a second news that came out that Blue Origin announces next customers to fly on New Shepard's upcoming human flight on October the 12th. So in about 2 weeks' time, we see the next flight of Blue Origin already. Now, it seems that this PR is just a kind of teaser, because I feel like there's just 2 of the 4 astronauts that are announced. It's not mentioned if they purchased or they're going for research purposes and so on. They're already they were NASA engineers before and co-founder of Planet Labs, and the other guy is a doctor as well. So it's kind of not really clear. There's a little bit of what they have done in their life so far. But other than that, I don't see much news here that are important or that are somehow useful for a Virgin Galactic investor. Just obviously the fact that you are seeing here the next move by Blue Origin. However, that's pretty much for the point that we discussed here. The last one is inflation and Tom Lee. While we know that inflation and the Fed just spoke to us just recently, and all the in the end of the day, because people are asking me that, inflation is something that is always part of the economy. Obviously now during the special times, it's a little bit let's say kind of special, because you are seeing all of this crazy developments, like with the housing prices explode, and consumer goods are having two pressure points. For one, they have the supply chain that is affected, and the second, there is so much demand as well that whatever comes to the market is like quickly away. Now, one of the most successful guys, in my personal opinion, predicting markets is Tom Lee. Tom Lee predicted over the last couple of months that we are going higher and higher in the S&P. He pretty much was on point on the bottom calling in March 2020, which is impressive. And very, very fact driven guy. And I'm now just seeing how I can connect my little microphone and headset so I can basically play a clip that is important, because at some point here in this clip he will be talking about the October. Okay, so we are just 3 days away from October. So here's what he actually says to October. So let me see, it's somewhere here, I guess.
Industrial or energy, they haven't performed. We've been expressing our concern around the lack of breadth, and that the NASDAQ has really been about 5 stocks. How do you reconcile that if the world is such a decent place to be investing more broadly?
Yes, our team's been looking at it under the hood, and including Tireless Ken, who just had a baby today. Congratulations to Ken. But
congrats.
Yeah.
Wow.
There's one measure of strength, which is the percentage of stocks above the 50-day and their 200-day. So they're both in a positive short-term and long-term trend. And the groups that you're mentioning, the cyclicals, the industrials, the materials, energy, they're the ones showing the biggest gain. So I think that they're actually coming back into trend, more stocks within energy. So even though the energy index is down, there's actually growing strength. And if you look at the S&P 500 advanced decline line, that made a new high coincident with S&P new highs. So it was not an index led by large caps. This was a broad participation. And in fact, comparing the July highs to the August highs, most of those gains were posted by epicenter stocks. So I think that you've had broadening participation, even though FANG is rallying. And again, we like FANG because many of these things like Amazon, Apple, Netflix, they're trailing the market year to date. I think they're going to catch up into year end. So I kind of like everything. I think it's an everything rally.
And very quickly, though, because we'll wait for the new note. By the way, congrats to Tireless Ken. Well, he's going to test that Tireless if he just had a baby as well, and his family on that birth. I saw a headline that COVID cases down 10,000 on a 7-day average from the last rolling week as well. There are some positive. I know it's tough. I know there's a lot of people suffering, but there are some positive trends we are seeing. Are there not? Quickly.
Yeah, absolutely, Brian. One of the things is Delta's so contagious and transmissible, and it's scary, but it has been playing out in roughly 50 days in every region it infects. And Florida is a great example. Florida, across almost all the counties now, cases are rolling hard, and we're seeing that in many of the states like Missouri, Alabama, Louisiana, which of course has been hit hard by the hurricane. So I think you're seeing more states experience that rollover. And hopefully, if that continues to play out, COVID is retreating in the U.S., and that would be a good news story.
Yeah, well, let's hope that certainly is the path. Tom Lee, we'll look forward to the note tonight. Always a must-read. Congrats to Ken. Tom, thank you very much. All right, Karen, let's trade this, and we'll start with you.
So it's not.
We are making a lot of highs in August, and I think those stats are very pertinent. But it's coming at a time of great caution. Most of our clients kind of agree with what everyone's saying here. You know, we're extended, and it's overbought, and nothing's cheap. And as you know, when people are looking for a top, that's really when markets can surprise you because we're in the midst of a wall of worry. So I'm in the camp that September probably surprises people because even though the seasonals say we're down in September, whenever the market's up greater than 13% in the first half, September actually is one of the strongest months of the year. So I think we could actually have a pretty dramatic rally in September in the midst of a wall of worry because obviously there's a lot of things to worry about.
Yeah, you know, and so this stat that we're showing here, there's two ways to look at it. September has the worst average since 1945, down 0.6%, but it's misconstrued. It tends to do okay, say 9 out of 10 years, but the problem is that 10th year that it does, not a target, but
that's a possibility. So I think, you know, our year-end target is 4,600 for the S&P, and I think we'll be touching close to 4,650 this month in September. But the reason I think it's a possibility is that, you know, there are some headwinds developing. You know, one is the eviction and mortgage moratoriums ending. So we have to see how this really plays out in the economy. But, you know, there are going to be people who become, you know, homeless. This wave that we're potentially taking, September that we're facing now, I think people are cautious. They think we're going to have a 2/3 of the time, and it's one of the strongest.
And even transports, and even some of the names that are the most cyclical in whether it's industrial or energy, they haven't performed. We've been expressing our concern around the lack of breadth and that the NASDAQ has really been about 5 stocks. How do you reconcile that if the world is such a decent place to be investing more broadly?
Yes, our team's been looking at it under the hood, and including Tireless Ken, who just
investors. But the risk maybe after that is the aforementioned Tom Lee, the head of research.
Okay, so just to clarify, I just was looking for the part where he talks about October, but you see, you know, that what he's trying to say since months already, you know, there is this negative news, yes, and there could be some sell-offs, but usually when people and everybody say, well, there must be a sell-off soon, usually those are the days where you would love to go into the market. And we have seen this a little bit in September already, right? Where if you're looking into the months was almost neutral. We're still having a couple of days. But here, you know, around the 20th of September was a point where we, you know, crossed the 50 moving average, I think. And, you know, people were very worried. Is this now the end of this whole trend that we have here, as you can see? And it's maybe a downtrend right now. But in the end of the day, it's really important what the economy says, and as we go into the year, you have to imagine that more FANG stocks are benefiting, right? People spend more in front of Netflix. They will order a lot on Amazon. They will spend more on social media. They will spend more on their devices, and so on and so forth. So you can see here that FANG is a really, really big part of the S&P 500, and therefore could climb a little bit more over the next couple of months. But let's have a look what he actually says concrete about October.
At Fundstrat Global Advisor, CNBC contributor, and his nearly daily note, a must-read. As many people know, Tom, on social media, I cite a lot of your stuff, especially at night. We're talking about COVID and the trends there. You and Tireless Ken doing a great job. So you've heard our historical conversation, Marie Antoinette aside. What is your take on history, market trends, and where we may be headed or be headed?
Beheaded, scary. I think
Nice.
I think markets can alarm everybody because we're already up 20% year to date, and we're still in a pandemic. But the underlying fundamentals are still really strong, and I think there's a lot of pent-up demand. So one thing that makes me constructive is we are making a lot of highs in August, and I think those stats are very pertinent, but it's coming at a time of great caution. Most of our clients kind of agree with what everyone's saying here. You know, we're extended and it's overbought and nothing's cheap. And as you know, when people are looking for a top, that's really when markets can surprise you because we're in the midst of a wall of worry. So I'm in the camp that September probably surprises people because even though the seasonals say we're down in September, whenever the market's up greater than 13% in the first half, September actually is one of the strongest months of the year. So I think we could actually have a pretty dramatic rally in September in the midst of a wall of worry because obviously there's a lot of things to worry about.
Yeah, you know, and so this stat that we're showing here, there's two ways to look at it, but his month has such a big drop, it screws with all the averages, right? We know how target on the S&P 500. Do you think the market will make?
I think, you know, our year-end target is 4,600.
Okay, I don't know
the fall wave looks for COVID, although, you know, the base case is still, I don't know how it is out in the economy moratorium. I think it's a possibility is that, you know, there are some headwinds developing. You know, one is the eviction and mortgage moratoriums ending. So we have to see how this really plays out in the economy. But, you know, there are going to be people who become, you know, homeless. And then we don't know how the fall wave looks for COVID, although, you know, the base case is still that this wave that we're in the midst is really the wave through the fall. So this is the worst. And if that's the case, the market can extend the rally. But those are two uncertainties. And of course, in the September that we're.
Hey, Tom, Tim. So positioning stocks.
Okay,
how
I
do
don't
you
know where.
Side of risk, maybe after that. Does the aforementioned, especially at night, we're talking about COVID.
I thought now we went through all the video. I cannot find it. Anyway, so you get the point. September could be a month that surprises us. We still have a couple of days. The worst is over, I guess. But you never know. And I think that we are coming into more interesting months. If you go into, you know, seasonalities, you know, Wall Street seasonalities, then you know that usually you have this year end, which is a little bit stronger, right? I mean, September is usually the months that don't have that great returns, but then, you know, October, November, December, and I feel that this is highly dependent on the most important, Q3 and Q4 earnings. So with that said, you know, best regards out to all of you guys. Scotland, we had Portugal here, we had Poland here, Lithuania, Moscow, Florida, and Mexico, and so many others. Thank you very much for watching, and I see you obviously tomorrow.